Welcome to the deep dive. Today, we're really getting into the weeds with the China Construction Bank, CCB, looking at their 2024 annual report.
Yeah, and it's worth noting up front, this isn't just any report. We've got unqualified opinions, basically a clean bill of health, from both their PRC and international auditors, Ernst& Young in both cases.
Plus, the top brass, the chairman, president, CFO, they've all put their names on the line, guaranteeing it's truthful, accurate, and complete. So, pretty solid ground to stand on.
Absolutely. So our mission today really is to pull out the key business insights, the financial story, their growth plans, what they see coming down the track in 2024 and beyond.
Right. We want to give you a quick but thorough understanding of what's happening with one of the world's biggest banks. Let's start with what they call their 5 priorities. Sounds like the core of their strategy.
That's exactly it. These are technology finance, green finance, inclusive finance, pension finance, and digital finance. And they're not just buzzwords. CCB is putting serious muscle behind each one.
Okay, let's take technology finance first. The report mentions loans over, RMB 3.5 trillion? That's huge.
It is. And what's really interesting is where that's going. A big chunk, about 2.84 trillion, went to strategic emerging industries. That's up over 26% year on year.
So quite a significant jump. What kind of industries are we talking about?
They're focusing on early stage, small companies, long-term bets, and particularly what they call hardcore tech. Think fundamental research, deep tech. It really ties into, broader national goals around tech self-sufficiency.
Makes sense. They also underwrote quite a bit in SciTech innovation notes.
Yeah, around RMB 19 billion. So they're not just lending. They're also helping these tech companies tap into the bond market directly. It's a multi-pronged approach.
All right, second priority, green finance. Another massive number here, RMB 4.7 trillion in green loans.
And again, strong growth, up nearly 21%. What this means is green loans are becoming a bigger slice of their overall loan pie, up about 2 percentage points.
Are they just lending green, or are they being green too?
Both, actually. They mentioned deepening their own low-carbon operations. Plus, their MSCI ESG rating jumped to AAA, which is top tier. That reflects environmental, social, and governance performance.
Okay. And they even have green initiatives for consumers.
They do, like a credit card installment plan for new energy vehicles. That program more than doubled, hitting over RMB 70 billion. So, encouraging green choices right down to the individual level.
Interesting. Let's move to inclusive finance. The loan balance is RMB 3.4 trillion, reaching over 3 million customers?
3.36 million customers, yeah. And that balance is up 12%. A key tool here seems to be their CCB Waidani platform.
Ah, yes, the platform. How's that doing?
Pretty impressively, over 400 million visits, tens of millions of downloads. It's clearly a major channel for reaching smaller businesses and people in rural areas which were previously harder to serve.
And they seem strong in agriculture specifically.
Very strong. They've been rated excellent for rural revitalization support 3 years running. Agricultural loans are up to RMB 3.33 trillion. Specific products like their Yunnan loan saw over 45% growth. They're really drilling down into serving the rural economy.
Okay, fourth is pension finance. This feels like a growing area everywhere. What's CCB's play?
They've got a unified brand, Jianyan, covering their pension efforts. They manage a huge number of Social Security cards, 166 million. Their enterprise annuity business grew by over RMB 100 billion.
So involved in both state and company schemes.
Exactly. And they're also a leader in the newer personal pension business. Plus, they're lending to the pension industry itself and trying to develop services at the community level. It's quite comprehensive.
Right, covering all the bases. And the last priority, digital finance. This sounds like it underpins everything else.
To a large extent, yes. They talk about empowering the integration of digital and real economies. Yeah. Their main platform, Binary Brain, has something like 579 million users. Massive scale.
And they're using advanced tech like AI, financial large models, or FLMs.
Absolutely. This is quite cutting edge. They've developed their own FLMs with almost 200 different applications already rolled out, covering half their employees.
Wow. What kind of applications?
Things like speeding up credit approvals, an intelligent assistant for account managers, tools like ChatCCB, an AI toolbox.
Yeah.
Even using AI to analyze code. They've built specific AI tools too, like one for evaluating SciTech companies using tons of data.
So really embedding AI deeply. They also mentioned ECNY, the digital yuan.
Yeah, they piloted an innovative use case on Hare's e-commerce platform, so they're definitely experimenting and implementing digital currency solutions.
Okay, so those are the five priorities. But the report also talks broadly about supporting the real economy, right?
Definitely. Their total financing scale topped RMB 30 trillion. They're a major buyer of government bonds. They pioneered mortgages for a specific type of affordable housing.
And they hit a milestone in credit cards.
First in the industry, apparently, to have over RMB 1 trillion in credit card loan balances. Shows their role in consumer finance. They also mentioned focusing on two key tasks and two renewals, basically aligning with national strategic goals and supporting things like equipment upgrades.
What about their business with other financial institutions?
That's significant too. They use tiered customer management, regional approaches, flexible teams. Their bill operations volume is huge, RMB 6.34 trillion, and they have a digital platform, Shanjian Tongsing, specifically for this sector, which is growing fast.
And they're big in custody services.
Leading position in third-party security custody. Over 96 million customers rely on them for that. It's a key infrastructure role in the financial system.
Briefly, what about their international arm, CCB International?
Focuses on cross-border finance. Assets around RMB 73 billion. Net profit was quite small in 2024, only RMB 14 million, but it's strategically important for connecting China globally. There's also Sino-German Aussparkasse, focusing on housing finance.
You mentioned AI earlier. They're using those FLMs for risk control too.
Yes, specifically for financial analysis and credit approvals. They generated over 130,000 reports for corporate customers using this AI. It even won a Tech Innovation Award. So it's a practical application enhancing their risk assessment.
Looking ahead to 2025 then, continued focus on lending to the real economy seems key.
Top priority. They also plan to fine-tune their asset liability mix, allocate more credit to those five priorities, defend their lead in retail credit, and try to attract more stable, high-value liabilities.
More push on consumer finance and tech innovation too?
Yes, intensified support there, plus for those two key tasks, two renewals, the private sector, and facilitating more international economic ties.
They also mention a circle chain cluster service model. Any idea what that is?
It likely means a more integrated way of serving customers within specific industries or supply chains, looking at the whole ecosystem.
And accelerating digital transformation continues.
Absolutely. With a more centralized R&D structure, it sounds like they want to be more coordinated and efficient in rolling out new tech.
And, unsurprisingly perhaps, a big focus on risk management.
Crucial for a bank this size. They explicitly mention strengthening comprehensive risk management and compliance, focusing on key areas to prevent systemic risks. Can't overstate the importance of that.
Okay, let's shift gears slightly and talk about the key financial highlights for 2024. The report says domestic markets were generally stable. How did CCB fare?
Well, stability doesn't mean no changes. Their overall interest income actually dipped slightly, by about RMB 5.8 billion.
Why was that? Didn't loan volumes go up?
They did. Loan volumes and financial investments were up, which should boost income. But the impact of lower interest rates was actually bigger, pulling the overall interest income down. The rate factor outweighed the volume factor.
Interesting. But on the other side, their interest expense on customer deposits decreased by over RMB 9 billion. How did that happen if deposits likely grew?
That's right. The average balance of customer deposits did increase. But they managed to lower the average cost of those deposits by 12 basis points, or 0.12%. So better pricing discipline meant they paid less interest overall, despite having more money deposited.
Okay, smart liability management there. But interest expense from other banks went up significantly.
It did, by nearly RMB 17 billion, or over 20%. That was mainly because the amount they borrowed from other banks and financial institutions jumped by over 24%. So more reliance on interbank funding, which cost them more in total.
Got it. Looking at their assets, there was a big increase in financial assets at amortized cost. What does that tell us?
Holding more assets this way usually means they're investing with the intention to hold until maturity, collecting principal and interest. It often suggests a more, let's say, hold-steady approach, less sensitive to short-term market value swings affecting the income statement directly.
And overall liability management. Any key strategies mentioned?
They emphasize consolidating their deposit base, keeping those customer deposits strong, but also diversifying funding sources, and actively managing costs through market-based rate adjustments while always staying compliant with liquidity rules. Standard prudent banking practice, really.
What about asset quality, the health of their loan book?
It looks pretty stable, even slightly improved. The non-performing loan, or NPL ratio, dipped a bit from 1.37% down to 1.34%. Not a huge drop, but positive.
And their buffer against bad loans?
There's robust. Their allowance, the money set aside for potential losses, covers 233.6% of their existing NPLs, and the overall loan provision ratio is 3.12%. That suggests a solid cushion. They also noted improvements in NPLs for real estate and transportation sectors.
Good to see improvement there. And capital adequacy, how are they positioned?
Very strong, especially under the new capital rules implemented in 2024. Their common equity Tier 1 ratio is 14.48%, Tier 1 is 15.21%, and the total capital adequacy ratio is a hefty 19.69%.
And why is that so important, just regulatory box ticking?
Oh, much more than that. High capital ratios mean the bank has a thick cushion to absorb unexpected losses without failing. It maintains market confidence, ensures they can keep lending even in tougher times, and ultimately supports financial stability.
Right. Now, the report didn't explicitly give us ROA or NIM return on assets or net interest margin in the snippets we saw.
No, but those are obviously key profitability metrics we'd normally look at. They tell you how efficiently the bank is using its assets and how profitable its core lending business is after funding costs.
The report did break down interest income and expense changes by volume versus interest rate effects. Why is that useful?
It helps you understand the why behind the changes. Is net interest income changing because the bank is growing its business, volume, or because the market interest rate environment is changing? Seeing that rate pressure slightly outweighed volume growth for income is a key insight.
And customer deposits are the biggest chunk of their funding costs.
By far. It underscores why managing deposit costs effectively, like they did in 2024, is so critical to their bottom line.
Okay, let's talk shareholder value. How is CCB returning profits to its owners? The report details profit allocation.
Yes, it does. For 2024, they allocated a significant amount to reserves, RMB 32.4 billion to the surplus reserve, RMB 53.6 billion to the general reserve. That strengthens the bank's foundation.
But what about direct returns? Dividends?
A big number there. They proposed paying out RMB 97.25 billion in dividends to ordinary shareholders. That's a substantial return of cash. There were also smaller dividend payments to holders of other equity instruments and non-controlling interests.
We didn't see any mention of share buybacks in these parts of the report.
Not explicitly mentioned here, no. But that dividend payout is clearly a major way they're returning value directly to shareholders. It signals confidence and a commitment to investors.
So let's try and wrap this up. Based on everything in this 2024 report, what's your assessment of CCB moving forward? What's the big picture?
I think their guiding theme for 2025, progress while ensuring stability, sums it up well. It's about balancing growth and caution. They're clearly focused on aligning with national priorities supporting the economy, tech development, green transition, while keeping a very close eye on financial risk.
So continuing the focus on those 5 priorities, leveraging digital tech.
Exactly. Deepening that integration. Strengthening their core businesses, but also cultivating these new growth areas, optimizing services, improving internal management through digital transformation, and crucially, bolstering that comprehensive risk management.
Seems like a strategy aimed at steady, high-quality development rather than aggressive expansion at all costs.
That's the feeling, yes. Proactive where needed, like in personal credit to boost domestic demand, but underpinned by a strong sense of responsibility for financial stability. Mitigating risks in key areas seems paramount.
Okay, so for you listening, what are the final takeaways? Considering CCB's sheer size and its strategic direction, its performance really is a bellwether, isn't it?
Absolutely. How CCB navigates the coming year, its success in technology finance, green finance, how it manages risks in areas like real estate, its digital transformation progress.
Yeah.
It offers a significant lens onto the broader Chinese economy and even global financial trends.
So perhaps the question to leave you with is, watching CCB's journey through 2025 and beyond, what will its performance tell us about the underlying health and future direction of China's economy, and what ripple effects might we see globally? Something to keep an eye on.